Today, Bitcoin rockets back above $27,000. CZ denies being a shareholder in Binance Russia's new owner, and Ceesay of Calaxy explains why he thinks the next crypto bull run will be like nothing we've ever experienced. Welcome to CNBC's Crypto World. I'm Jordan Smith. Cryptocurrencies rising this morning, with Bitcoin jumping back above $27,000 by noon Eastern, Ether meanwhile crossing above $16.50, and Polygon's Matic token rose to 52 cents. Okay, let's talk about the top stories. Coinbase took to Capitol Hill on Wednesday to sway lawmakers to pass clearer regulations. The crypto exchange's Stand with Crypto campaign handed out cold brew at the Capitol, and CEO Brian Armstrong brought together lawmakers and crypto entrepreneurs. On X, he posted a photo in the rotunda saying that it was great to have so many members of Congress meeting crypto entrepreneurs, and that you can't have a few bad apples, both in the industry and in our government, set the narrative. Armstrong has, of course, been critical of the pace of U.S. regulation and the crackdown from the SEC. Coinbase is facing a lawsuit from that agency, which alleges that the crypto firm ran an unregistered securities exchange. Next, Terraform Labs co-founder Do Kwon is fighting the SEC's push to depose him. Last week, the agency requested to depose Do Kwon before the trial's discovery deadline on October 13th. In a filing on Wednesday, his lawyers say an in-person deposition would be impossible because he's in Montenegro, and a written deposition would violate his due process rights. Of course, the SEC is seeking to extradite him to the U.S. to make that deposition easier. Do Kwon faces fraud charges filed back in February surrounding the collapse of Terra Luna. Last, Binance is selling its Russian business to a newly formed entity, and CEO Changpeng Zhao is denying that he has any stake in the new owner. The crypto exchange announced on Wednesday that it was selling its Russian unit to Comex, a mysterious new entity whose website was registered on September 22nd. On Tuesday, its X account posted introducing Comex, and according to an announcement from Binance, it will now migrate all of Binance Russia's users over to the platform over the next year. Questions quickly began to mount about who actually owns this new business that's taking Binance Russia's customers. CZ took to X to say it wasn't him. He says he's not the ultimate beneficial owner and doesn't own any shares. Now, as for why Binance is selling off its Russian business, it says that operating there isn't compatible with its compliance strategy. That's as the war in Ukraine rages on and as the DOJ reportedly investigates Binance for sanctions violations, according to the Wall Street Journal. All right, back to markets for our main story. Ceesay, the co-founder of the decentralized platform Calaxy, argues that between corporate adoption, BlackRock filing for a spot Bitcoin ETF, and regulatory advancements, there hasn't ever been this much discourse around digital assets. Crypto World's Talia Kaplan spoke with Ceesay about why he believes we're, quote, on the precipice of what could be the greatest transfer of wealth that has ever happened.
You recently wrote a piece explaining why you think the next crypto bull run will be like nothing we've ever experienced. In it, you note that the crypto market has been pretty boring due to asset prices traveling sideways for most of this year. You argue that still hope in the vision of the Federal Reserve's soft landing combined with the upcoming Bitcoin halving has the Web3 community, quote, salivating at the prospect of many life-changing opportunities that could be within reach soon. Can you expand on your reasoning as to why you believe there could be a prolonged crypto rally in the near future, and what's your timeline?
Yeah, absolutely. First of all, thank you for having me on the show. Genuinely appreciate it. I would say that crypto has been rather uninteresting for quite some time right now. If you're not deep into the space, you're probably not looking at it as much, or you're not checking your Coinbase or whatever it is that you might use to check on asset prices, given they've been depressed for quite some time. But in the piece, I note that there are so many different features at play. The market is quite different than it was in the last bull run that we saw in 2019 into 2020. There was a quite different market outlook right now in terms of the maturity of the asset class, the amount of development that's been happening on some of these blockchains or alternative blockchains that have emerged since the last bull run. In addition, with those macroeconomic trends that we're seeing with in the general market, it seems to be the perfect opportunity for there to be increased activity, and especially as the market starts to cure and flows start to come back into risk assets. I expect Bitcoin and a lot of other digital assets to make that rally and extend to new heights that we haven't seen before, given all those recent developments that we've seen over the last couple of years.
And it certainly will be interesting to see what transpires. But looking at Bitcoin specifically, the cryptocurrency has been trading in a tight range for months and hasn't been able to surpass the $32,000 level so far this year. Why do you think that is? I recently interviewed the CEO of crypto wallet Beam, and he argued that for the past few months, there haven't been many new retail and institutional participants coming into the market. And as a result, people have been trading with Bitcoin that they already own. Therefore, the cryptocurrency hasn't been able to move past that range of about $25,000 to $30,000. Do you agree with his argument?
Yeah, I mean, I think to a certain extent, absolutely, there's a lot to that. But even, and from my perspective too, I think with all risk assets in all markets, volatility is where money or opportunities are made. And so, not to say there hasn't been any volatility over the last couple of months. We've obviously seen spikes here and there. Like you've mentioned, we've had trouble, reaching or breaking through, that support level or that resistance level. Sorry, of 32,000, and it has a lot to do with the fact that the money that's already here in the asset class has been rather invested. There's a lot of different stats and metrics that you could really look at, but the vast majority of crypto wallets, or a lot of them, are dormant, especially amongst people who are newer to the asset class and people that are that sort of that additional catalyst for general market upside pressure. And so just given that there haven't been that many developments, that many consumer use cases featuring Bitcoin, as well as the general awareness, the public sentiment I call out in my piece about digital assets isn't particularly high either. And so when you think about where that new money might come from, it really, is, pretty few and far between. But we expect that to cure as the market gets better. Just generally over time, the American person is feeling strapped for cash these days. A lot of people are living paycheck to paycheck, and a lot of that speculative money that would come into the asset class hasn't been trickling in. But just as with any sort of market cycle, as we start to come back on the other side, the appearance of a soft landing or something thereof might obviously entice people to come to the asset class and seek greater investment returns.
So over the summer, we saw a wave of asset managers file applications for spot Bitcoin ETFs. That includes BlackRock, the world's largest asset manager. And just this week, 4 U.S. lawmakers sent SEC Chair Gary Gensler a letter urging the agency to immediately approve spot Bitcoin ETFs following a U.S. Court of Appeals siding with Grayscale over the SEC in its effort to convert its Bitcoin trust into an ETF. What do you think will happen with those filings for spot Bitcoin ETFs? And if those applications do get approved, what do you think will happen to crypto markets?
Absolutely. I mean, I think it's an amazing time for crypto just because I think it's a big step of recognition for those ETFs to get approved. And additionally, it's a large step in the right direction for getting people exposure to digital assets. I think one of the biggest issues with Bitcoin, or obviously digital assets as a whole, is the idea of self-custody, because it's an idea and familiar, a behavior so unfamiliar to the vast majority of people. And so the fear of losing your funds or the fear of not being able to point at anyone, sort of the greatest aspects of Bitcoin can sometimes lead to the biggest friction points when it comes to expanding its user base. But I think the addition of ETFs as a potential mechanism for investment will allow it to be far more accessible to the vast majority of users who don't want to take on that operational risk of dealing with digital assets. As pertains to the idea of whether they're going to get approved or not. I'm no expert, just like nobody else might be, but I think what we are finding in the market is that there are fewer and fewer reasons for the SEC and the powers that be to not approve these ETFs. There's been a lot of mobilization within the community, within the ecosystem as a whole, within financial markets, and you're seeing this myriad of the collaboration between the world's the BlackRocks of the world who've ruled the world as it's been for however long, entering this space, which is a huge point of support and a point of legitimacy for digital assets. And I think that pressure from those traditional players that have been doing this for quite some time will lead me to believe that I think we have a strong chance of seeing a Bitcoin ETF approved. And if we do see a rejection, I can only imagine that there's going to be an approval quite soon, just given that there's so many out there in the queue.
And I'm sure that fear that you speak of was amplified by the collapse of FTX. But let's talk about your platform, Calaxy. It officially launched last month, and the platform aims to help empower content creator and artists, as well as help them interact directly with their fans. I heard you say in a prior interview that Calaxy is meant to be a highly consumer-facing product. Can you expand on that, and how does it work exactly?
Yeah, absolutely. So Calaxy is the open social marketplace for and by creators. We are built on Hedera Hashgraph, which is actually a blockchain alternative. But essentially, our platform allows content creators to offer digital experiences to their fan base. And so, whether this is things like video calls, things like video messages, custom experiences, and more, essentially, we're marrying that Web2 marketplace activity with the paradigm shift of a decentralized ecosystem connected by peer-to-peer crypto wallets. And so, essentially, within our application, users are able to go into the social feed or go into the general application. There's a social feed, there's a wallet, there's messaging capabilities. It's a traditional social experience or what you might come with, centered around the idea of a non-custodial wallet, enabling the power of value transfer, and which obviously supports the idea of the marketplace activity. And so we allow content creators to get paid out in either USDC or fiat currency, and consumers are able to use their credit cards to purchase experiences. And so it's meant to be a very highly Web2 facing experience, very consumer, which allows people to lean into the utility of a crypto wallet and really change the idea of what digital assets can really do and the use cases they can serve.
Ceesay also explains how his platform was able to raise more than $33 million even amid a bear market. You'll be able to check out that full interview on cnbc.com/cryptoworld. That's all for today. We'll be back again tomorrow, and we'll see you then.